Hey, everybody. Welcome to the morning market briefing. I almost said Monday, but it's Wednesday. It's Wednesday, January 14th, 2026. Almost said Monday after a prolonged discussion with Ben no more than 5 minutes ago about what day it is. And it is Wednesday.
Tomorrow day.
Yep. Tomorrow day is going to be big.
Tomorrow day is burrito day.
Yep. Burritos coming back. Hope you're doing well out there. Make sure if you are watching us, subscribe, hit the like button, get alerts, all that good stuff. Plenty to talk about. We have observed that the calls have gotten longer. I don't think that's because of YouTube. I think it's just the news cycle we're in right now. So if you missed the old 15-minute calls,
sorry.
Yep. More content for free, so you're welcome. 30-year auction yesterday, Tom. Pretty solid demand once again coming on the heels of a good 10-year auction.
Yeah, I think people are very comfortable with bonds right now where they are. As they tick up, we see the demand come up, and we're really stuck. I mean, we've talked a lot about this internally, but the MOVE index, which is essentially the VIX, the measure of volatility for bonds, is pretty low and consistently low over the last, call it 2-3 months. And so I would not expect big moves anytime soon. So, steady as she goes, we're just going to continue to block and tackle on the bond side.
What I want to ask you this: what is in the horizon that would potentially precipitate a meaningful move, specifically on the 10-year right now?
If they decided to, if the Supreme Court decided to issue tariff refunds, I think that would be a big mover because there's a lot of income coming in, and that's bringing down the deficit. But otherwise, I can't think of anything that is obvious. I mean, it'd be a black swan event. It'd be a new war. It'd be some sort of chaos. It would be, hypothetically, another assassination attempt that could go off of someone, and let's call it the top three. I mean, it's going to have to be something big because right now people are locked in.
Yeah, it just seems so steady. We got CPI yesterday. We got PPI coming in, but a lot of reaction, at least from the commentary standpoint, Ben, on CPI. What are people saying? What do you think?
Yeah, a lot of it's just kind of, we talked a little bit about the market reaction, how it was so muted yesterday. And I was a little bit curious as to why that was the case, because in a world in which if we had printed 0.4%, for example, I think the implication is, hey, inflation's really here and all the Wall Street watchers were right, but we came in at 0.2, which is quite different. I mean, what Wall Street was assuming was a magnitude change from what had been the trend, which was to lower inflation. And so that was in the assumption, and we did not get that yesterday. So I don't know if and a couple things might be happening here. Number one, either people are ignoring what Wall Street economists are saying and what the estimates actually are, or they are ignoring the data that we're getting. And I think if you're ignoring the data that we're getting because you think that the administration is basically manipulating it, I think that's foolishness. A lot of people have been pointing to what the average inflation is over the last number of months. And of course, we didn't get the October number, but we can impute it. And if you do that, you're at 0.23 in September, 0.08 in October, 0.08 in November, and 0.24 in December. This is well below where we were in the summer after the tariffs came through, which was 0.32 and 0.35. And to me, that's significant. When you string together multiple months that are a tenth lower, newsflash, this 12 months in the year, that adds up. Yep. And when you're talking about are we closer to 2 or are we closer to 3, that's going to play a significant role. So that's my view. You could say I'm more biased to what the data that we've got more recently. I would say that the more recent data is probably more relevant.
Be. Yeah. And I think you made the point about people just kind of poo-pooing the data. I don't think in theory there's anything wrong with that. I mean, there's certainly major economic data that we roll our eyes on that we publicly mock live as it's released, such as the jobs data, whatever it may be. There's certainly data out there that is questionable, and I think you're right to question it. But if policy and decisions are being made based on that data, whether we believe it is accurate or not, simply writing it off gets you nowhere.
Yeah, I mean, University of Michigan's another great example. I've had a lot of the number of people in the C-suite who look at University of Michigan data is astounding to me. And every time I talk to them, I say, it's actually not terrible if you look at the
trend of
change.
it. Yeah. Right now it's at 4.2. A year ago it was at 7.
Exactly. So you could say inflation expectations have come down. Don't anchor to the level, but look at the rate of change, and that's kind of what my recommendation is with any of the data. Is like if it's bad data, at least the bad data is hopefully consistent. That was the problem with ADP. They changed the methodology, and so their jobs numbers have gotten way off. But I mean, I think Rick Rieder's right. Yesterday, he came out and in a note to clients, he said, "We believe that inflation is clearly yesterday's problem, while labor markets are likely today's and tomorrow's." Maybe he's trying to pre-position himself to get the Fed chair job when he steps into that interview tomorrow. But
I think he's right.
And he gets paid to make these decisions. I mean, he's actually managing money and he's allocating capital, and he wants to deliver returns. That's his utmost goal right now, and he's putting his money where his mouth is, and he's saying inflation's yesterday's problem.
And we've talked so much. I've said this for a decade to clients or on calls, whatever it may be. Recognizing strength in the economy is so politically unpopular. It really is. And I think when you combine that with the inability for the general public to change narratives on a topic that they're not in the weeds on every day, I think you kind of have this recipe for people continuing to talk about, and therefore people continuing to hear about inflation. And I do think that has a psychological impact. We got really strong mortgage application data yesterday, up 28% week over week. Refis basically up 100% as rates briefly dropped below 6%. We'll see if that trend continues, but we've talked a lot about housing really being a key to getting this economy juiced. We'll take the win when we get it, I guess.
I mean, there definitely was a significant move after Trump announced the $200 billion. How long we stay there, remains to be seen. But, I've seen, 550 on 15-year, 570 on 30-year. I mean, there's definitely an effect. And if we can get that going, I mean, for every person who had an 8% mortgage who refinanced under 6, I mean, that's a massive capture of free cash flow for them going forward. So hopefully people are paying attention to this and making the right financial moves, because those are the people who I think are the most at risk, the people who bought when housing prices were slightly higher, particularly in that mid-range, on a price point for house, and had an 8% mortgage.
Yep. But good news that we're getting the refis coming through. Let's talk PPI. It's coming through right now. Guys, what are we seeing?
So this is pretty interesting. The expectation for headline was 0.2 month over month. And this, keep in mind, this is November data. So we haven't gotten the December data yet. We were talking about it pre-call. I'm not sure when we'll actually get that. So yesterday's CPI was December. This is PPI for November. But that came in line. The ex-food and energy core expectation was 0.2, came in at 0. And then ex-food, energy, and trade expectation was 0.2, came in at 0.2. Now, notably, the year-over-year expectation was 2.7 for the headline, came in at 3. Same for ex-food and energy, 2.7 expectation came in at 0.3. And then the ex-food, ex-energy, ex-trade expectation was 2.9. We came in at 3.5. And so that's an interesting move. I'm looking through some of the data here. I mean,
so the month over month was low,
but the year
was high.
So which means we probably got revisions for previous periods.
Yeah, I'm trying to look through the data now. I mean, the things that are sticking out are, the trade and warehousing costs are still high. Energy is exceptionally high, which is in line with what we saw in CPI yesterday. So the energy print is 4.6% month over month, which is interesting because the ex-food, energy, and trade number is the highest on the year over year. So there's a lot of data to work through here, but it looks like, some of the processed materials like chemicals and minerals, think probably rare earth goods have probably gone up. We know that China has tried to bottleneck those. We know that the warehousing is still taking high premiums. They're sort of pushing price, even though the tariffs aren't actually increasing the price, but they're kind of taking advantage there. I think that trend still remains. So I think those are the three big takeaways. Big energy swing, which we really have to figure out what that data actually entails, because energy costs continue to come down. But again, this is really backward looking.
They
2
even-
months back now.
They even talk about this in the release. They say over 80% of the November increase can be traced to prices for energy.
Yeah, see, immediate demand can be traced to 12.4% rise in the prices of diesel fuel. That's in the report, just in the written part.
And I know we had some refinery shutdowns in the fall, so maybe
Yeah.
that played a role. I mean, Valero stock is up, 30% over that time period. So they're the key beneficiary of that. When oil prices don't go up and diesel prices go up, your refiners do very well. And typically that happens when you're turning around some of those refineries in the shoulder months.
Yeah, it says 10.8% increase in natural gas was a major factor, but we've already seen that unwind.
Yeah.
So I'm interested to see what PPI looks for next.
For December.
For the month
For
that we
next
just had,
last
not
month.
the one that we just had 2 months ago. But
Yeah.
it's a bit of a surprise here. I will say the bond market is not reacting to this in really any notable capacity. We started at a 4.16 on the 10-year. We're now at a 4.156. So
Basically the same.
basically the same, arguably no difference.
Retail sales we got coming through as well. Looks like November reading their 0.6% expectation was 0.5. Ex autos came in at 0.5. Expectation 0.4. Relative strength there. Again, it's so frustrating having to deal with this lag on the data. You have to really go back in the headspace of where were we 2 months ago.
Yeah, we got some negative revisions on I guess it would be the October data as well, but very small. Basically I would say we're coming in line if you add the two together. But again, not December. And I don't know if you guys do a lot of shopping December, but I would say that I do almost all of the shopping that I do in December.
Yeah. Yeah.
So that would probably, I would say is probably more important data that we do not have.
I'm just going back through the PPI report. They updated the quality index. So when you have a new product, like if you have a new model of the iPhone or if you have a new model of vehicle, you have to update so it's quality. So it's like the 2026 Hyundai Tucson is going to be more expensive than the 2025 Hyundai Tucson, but there's a quality factor there that it's not just all price. There's some actual product improvement. And so they update those two. So I don't know if that's playing a role. And then there's some more technical notes for January and February that are going to hit. So I think PPI is going to be noisy for some time period, but I think that this data suggests that, there's a lot in the rear view mirror that happened. If you look at the month-over-month number in November, it's more sanguine. And then so if you look at the trend, it's down.
Yeah.
But again, it's weird data, and after we just got done dismissing, saying, hey, be careful on what you dismiss or what you don't.
But look at the trend.
Yeah.
Look at the trend. On the political front, Trump, a lot of talking yesterday, man. A lot of talking. Ben was listening to him over the wall. I guess he was up in Detroit. It felt like he talked all afternoon. I don't know if he actually did or if there were some breaks in there, but he was really going, continuing to push the topic of affordability, making a new ally in the one he calls Pocahontas, Elizabeth Warren. So they've been talking on the phone, no big deal.
Weird. What do you? It's got to be.
It's got to be a wild phone call.
Absolutely. But I imagine. We do a lot of complaining about Elizabeth Warren, but if there's anything that they're aligned on, for sure, it's that Jay Powell is the worst because
she's no longer aligned with that.
But she notably said that he was going to destroy the world when he hiked interest rates, and then we would have mass unemployment, and that the whole economy would collapse. And some of that is true, not so much in the way that she thought, but people forget she was the first to question whether or not we should have an independent Fed. But I think that the Venn diagram of people who like to yell at Jay Powell, those two are going to be right there, smack dab in the middle. So,
yeah, famously in 2024, she went on the long rant about Powell needing to cut the rates. Last year, she went on the long rant in 2025 about how Trump needs to stop telling Jerome Powell to cut the rates. Some of the this is a hot take, but I think some of the politicians they kind of go where the wind's blowing.
Yeah.
Just going to throw
There's
that
got to
out
be
there.
a lot of like what you say publicly, like in those depositions where you're just, it's all fire and brimstone, and in Elizabeth Warren's case, just shrill alarmism, that when you actually have a phone call with the president, I bet they're probably much more level-headed.
Yeah, absolutely. It's got to be.
Yeah, because like
It's
otherwise,
it's so performative.
it would be insane.
It's so performative. Trump also seemingly had a late night meeting, getting briefed on Iran. He has said that help is on the way. Nobody really knows what that means. Ben, you still think no military action?
I think no military action, but I'm becoming less confident in that.
In Greenland, what's the latest there?
J.D. Vance and Marco Rubio are sitting down with both the Danish foreign minister and the Greenland foreign minister later today. This comes out on the heels of Trump truthing that we need Greenland. So it's going to be, and then Greenland's come out and said, if we're going to ally with anyone, if we have to choose, we're going to choose Denmark. So it's setting up for, I don't know how this gets reconciled.
Yeah,
honestly.
Trump said the United States needs Greenland for the purpose of national security. It is vital for the Golden Dome that we are building. NATO should be leading the way for us to get it. All caps. If we don't, Russia or China will, and that is not going to happen. I mean, the all caps. I mean, we talked about this yesterday, but when he's just going, I would love to hear a speech when it's just the majorly inflected $1. I mean, he tweets how he talks. It's crazy.
This is way off topic, but good name for a bakery, Danish minister. That being said, I am not a Danish fan. If I like cream cheese
Overrated.
more, I'm more of a
Not a cream cheese guy, period.
Yeah. Danishes in general, I'm not a fan of, but Danish minister, great name for a bakery. So file that away for future outside business activities.
ACA enrollment ends on Thursday. How do you read through kind of this data, Ben?
So they have data on the number of signups, and I was thinking, 3 people would have signed up for the ACA with all the headlines that we're getting about how premiums are going up so much. But actually, out of about 20 million returning customers, only 800,000 haven't signed up yet. So that's still a lot of people.
And I would argue that as a percentage of people that have enrolled with 2 days remaining, that may very well be normal.
Right. I mean, you're talking 95% have already re-enrolled. So this is, I think it's pretty good news. And it illustrates why the administration and Congress is not more frantic on getting something done with healthcare, because I think they think that this will just go through and we won't really think about it. And they may be right to an extent. I still think that something on healthcare should be done. And we still have that bill that's kind of sitting in Congress.
Yeah.
That would be a 3-year extension. So we'll have to see what happens with that. But I'm encouraged about the enrollment.
Yeah, and I
numbers
continue
that
to
I'm
think
seeing.
something has to get done and will get done. On the company news side, got earnings from Wells Fargo, Bank of America. Thematically, Ben, what are we seeing from the banks?
Big thing is charge-offs are down. If you look at Bank of America charge-offs, if you look at Wells Fargo charge-offs, they're down on a year-over-year basis. They typically always tick up in Q4, just seasonally, as those things happen. And they did tick up slightly at Wells Fargo, but they actually ticked down at Bank of America. So, the credit quality of the American, both consumer and the corporate borrower, is incredibly, incredibly good for this point in the cycle. If you think it's mid to late cycle, then this is an abnormally strong credit profile. So I don't think it's mid to late cycle. I think we're much more in the early cycle. And I think that's the big takeaway. Bank of America is bullish on the economy going into 2026. But they're always more bullish. Wells Fargo slightly underperformed some expectations, but the big theme there is that now that the asset cap is lifted that was placed by the Janet Yellen Fed in 2018, now that is lifted, they feel like they're ready to rock and roll on a level playing field. So good news for the banks. JP Morgan traded off yesterday, but I wouldn't read too much into that. I think that was more of an expense situation and just more concerned with the credit card situation. But again, I think that this is noise and not necessarily like fundamentals.
This is a this is a vibe check, but maybe this is my own personal worldview because the first place I ever opened a bank account was at Bank of America. But do you feel like Bank of America used to have a more premium place in the banking society? Because I feel like when I was a kid, it was like, man, Bank of America, that's a nice bank. And then somehow here we are 25 years later, and it's just like Bank of America kind of sucks.
Before 2008, I think that was the case for sure.
Yeah.
And then they acquired Countrywide, and they were not on your
Merrill
side.
Lynch. Yeah.
Yeah, it's kind of I think that general shift is kind of interesting now that I think about it on banks, because it's one of those things where 10 years ago, 15 years ago, it's like, oh, I want to be a customer of the biggest, shiniest, most globally recognized bank.
Yeah.
When I get questions from clients now, it's like, hey, do you know a really small local bank? That's what they're
so
looking
much.
for.
Yeah, there's so much local bank stuff
Yeah.
that we deal with. Some are better than others.
Yeah, for sure.
So,
For sure.
I mean, I use USAA, and it's mostly because the auto insurance is nice. And also because they assume you're in the military, which I am not. They refund any and all ATM fees. Not that I use cash ever anymore, but that used to be more of a factor where you could go to the worst, disgusting gas station ATM, and you just get that $12 refunded to you, which was nice.
Yeah. That apply in Vegas too?
USA would not let me use any of the ATMs in Vegas, as you may remember from this year, which is very frustrating.
I do recall. Getting cash in Vegas, one of the more difficult
Harder
things to
than
do.
we thought, yeah.
All right. We'll wrap it up there. Hope you guys have a great day. We will talk to you tomorrow. Make sure you subscribe, like, get alerts, share it with a friend, all that good stuff. Reminder, next Tuesday at the Brickyard off Marietta Square, we're doing our 2026 Market Symposium. Come by for a thematic overview on what Ben and Tom are seeing for the market, the trends and themes that they think will be most relevant, and also have a guest speaker coming in. So come by, have a drink, get some snacks. Let's roll.
Hicks was telling me that he will be offering out
Free
and
hugs.
high fives to any confirmed super user. So come get your free gift, which is just the companionship of a handsome blonde man. Very powerful.
Yeah, and people don't know. I mean, hugs from Hicks, often one of the best gifts given out at the Narwhal holiday party. So,
And ironically, he's never given them out
Nope.
willingly. They've been non-consensual gifts given to other people that involve him hugging them.
yeah, so we're excited for that. He's going to greet you with arms wide open. So, and we're not talking about the Creed song. Talk to you guys soon.